Hello and welcome back to True Options Masters, and welcome back to Options Arena, the weekly battle of the brains where our options masters Mike Carr, Amber Hessler, Chad Shoop, and Chris Cimorelli, options master in the making perhaps, pit their ideas head to head to head to head. Welcome back. Thank you for watching. If you're not already subscribed to our YouTube channel, be sure to do that down below. And if you're not subscribed to the True Options Masters e-letter, you're definitely going to want to do that too, because that's where our best insights are coming to you every single day of the week. I'm your host and managing editor, Mike Merson. You are probably familiar with me at this point, but if not, get familiar, because we're going to have a really exciting show for you today, and we have a stellar idea to talk about. Stocks are down pretty big this year. A lot of people that have savings to plug into stocks are looking at these prices and their mouths watering a little bit. So I wanted to ask our True Options Masters this week, if you had $10,000 to put anywhere in the market right now, where would you put it? The only catch is you have to pick an ETF, an exchange traded fund, which tends to represent a lot of different stocks in a specific sector. So I'm going to stop babbling and I'm going to turn it over to Chad Shoop this week. Oh wait, before I do, I want to reveal last week's winner. Last week's winner of Options Arena was Mike and Chad tied for first place and for the first time ever, I also want to say, because Amber Hessler usually cleans up in our polls. So if you haven't yet voted in Options Arena for the best of our options masters, that's also going to be in the description below. So be sure to do that. And now over to Chad Shoop. Chad, what do you have for us today?
All right. Thanks, Mike. That's awesome. Me and Mike to share first place. All right, so I'll dive into this.
And I am ready with the timer in 3, 2, 1.
All right, so we're diving into the relative rotation graph, or my profit radar, as I like to call it. And here we have a monthly outlook on this, because I guess we were thinking a little more long-term, putting $10,000 into one of these ETFs or to a ETF. So these are mostly the SP 500 sectors that are circling around in the middle. Utilities, real estate, consumer staples, the whole shebang. Then out on the outside of this thing, we have the energy sector. That's up in the leading quadrant, so we're expecting weakness in that one. And I added this one down here, the biotech sector, because that's the one that I like. This was the big one that I talked about for, I guess it was a prompt that we had a couple of weeks ago about just, if you had to buy something and hold it for 10 years. I was in the biotech or in the healthcare industry, and that was the sector that I really wanted to focus on for kind of that big outlook picture. And that's going to be where we're looking at today, the biotech. You can see that they're beaten down. They're in the lagging quadrant on the monthly. So they're the sector that we are looking to turn around things here over the next couple of months. And we can see that on the chart that it is pretty banged up. It's fallen quite a bit here since 2021. That's a 60-70% drop to the lows. And then we started to get a little bounce out of that, and that's where we are today. So this one's also not too high off the lows. So I expect more volatility in the short term, but over the next several, 6 months to a year and beyond, I would look for the biotech ETF to really start to take off. So this is the one ETF that I picked for today.
All right, Chad, like in the XBI ETF, that's the biotech ETF in the S&P 500 for a $10,000 play. Very exciting stuff. We're switching up the order a little bit more this week. We're going to Chris Cimorelli next. Chris, what do you have for us?
Well, I think that Chad has a very good recommendation with biotech. However, I have to be honest with you, I'm not ready to buy anything yet. Now, you said we had to pick one ETF, but you left the rest of the parameters open and clear. So I'm going to share my screen and show you exactly what I am looking at. So I am looking at SQQQ. SQQQ is an inverse leveraged ETF that tracks the NASDAQ. So let's break down what that means. An inverse ETF is an ETF that goes in the opposite direction of the underlying security or asset or market that it is targeting. So in this case, we are looking at an inverse NASDAQ ETF. It is an ultra pro short ETF. That means it's also leveraged. So it uses things like debt and futures and maybe even options to boost the gain, similar to how options work. So it's got that leverage aspect to it as well. So over time, this investment is going to suffer from time decay. But in the face of volatility, as you can see, it can go way, 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 way up. So I've got some trend lines drawn here from a low that it hit in mid-March. Now you might remember that the market had rallied, and then by around the turn of April here, this investment bottomed as the market was beginning to top again before sinking lower. And as you can see here, this puppy just shot up. So if we draw from our intraday highs and lows here, we can see this thing went up 105%. Now to compare it to the NASDAQ, let's jump over to QQQ, and we can see that to make that relatively 100% gain, the NASDAQ dropped about 24%. So it roughly 4x'd the move. So I wouldn't necessarily buy this quite yet. I would wait for it to at least retest this lower boundary right here, and certainly wait to see how the market continues to respond to inflation data that came in on Friday. But I think that this could be a very good bet for the rest of the year, a way to make money as the market continues to go down. So not to be very clear, I am greedy, but I am greedy for things I want to sell. And with an inverse leverage ETF, you can make money as things go down.
Very good stuff, Chris. Thank you for that. The very bearish side coming out of Mr. Cimorelli this week. And last but not least, we're going to bring it over to Mike Carr. Mike, share your idea with us.
Thank you, Mike. I'm with Chris. I am anti-tech. And to me, the ETF index that is anti-tech is IWM. Now, this is small caps. And if we look at QQQ is about 56% tech stocks. IWM is less than 10% tech. It's mostly financials. It's consumer stocks. These are small caps. This is the potential. Now, what I like about it, it is on a buy signal here on my greed gauge. We don't know whether this will be a sustained signal yet, but as we see, sustained signals in the greed gauge tend to be profitable. So we're going to watch that closely. IWM has already had a bear market. We're already down 30% from the highs. We're starting to bounce back. If there is a recession, small companies are going to probably lead us out of it. Tech is really beat up. Over half of the stocks in the NASDAQ 100 are down over 50%. That doesn't mean they're going to rally. It most likely means they're going to struggle. They're going to sit around for quite a while, and a lot of going nowhere. So while that's happening, I think small caps are going to break out into the lead. And one ETF, I would overweight small caps through IWM at this point. And that's all I have.
All right. Thank you, Mike Carr, so much for that idea, as well as Chad and Chris. We have Chad, bullish biotech. We have Chris, bearish tech. And we have Mike, also bearish tech, but in a different sort of way. So I actually want to do something different on this video. I want to open up the conversation. Do you disagree with one of your fellow options traders? Do you think some of these ideas suck? Do you think that these ideas are inspiring you and convincing you in the other direction? I just want to open it up and see what comes out.
Well, Mike, I do have to say, I think Chad is only slightly wrong. I think it is a good time to start going long on biotech. I think that it is one of the most oversold parts of the market. I think it's slightly too early, but if you're going to consider something to go long that is not leveraged, that's not going to suffer from time decay, I think he's absolutely right. But I think Mike Carr is dead wrong on this one. I think that if we are expecting to see more volatility and lower lows in the stock market, speculative small cap stocks are probably one of the worst investments you can make right now. So if I could downvote you, Mike Carr, I would downvote you today.
Boy, Mike, I would ask you to defend yourself. That was quite the
We should
lashing.
give him an opportunity to respond. Correct.
Well, I could see your point, Chris. IWC, the micro caps, would be those smaller, less financially sound small caps that you're referring to. IWM, these are companies that have sales generally. These are the companies, they are definitely going to be the next market leader. I was looking at this as I have to put $10,000 into an ETF now, today. And where am I going to do that and not lose as much? Small caps have been beaten down quite a bit. they have a chance of recovery. Tech, not so much. Inverse funds in the long run are designed to go to zero. So they're trading. So I didn't really consider them as an option for this answer because in the long run, we're all dead and those funds are definitely going to be dead in the long run. So not sure IWM is such a bad idea.
I'm inclined to agree with you, Mike Carr, but I want to hear what Chad thinks.
All right. Yeah. I mean, I was kind of on the same boat as Mike as far as the way we were looking at this, more long-term type of trading. I think Chris is taking a shorter-term angle with it over there. Because I am, like, we go back to last week, I was the only bear in the room, technically. I was more bearish than Chris. He was looking for a short-term rally. Mike Carr was looking for a short-term rally still. And maybe some of that, whatever happens from week to week changes their mind too. But, the alternative for me would have been like a bond fund. The way that they've been beaten down, rates are probably going to have to cool off. They're not going to go too much higher. I don't think they're trying to catch inflation. But that would have been my alternative. But then, again, I don't think bond funds are good long term. I just think that would have been a good thing to get you kind of through this volatile period in the market.
Yeah, I actually have to agree with Mike. I think he's dead on this one. Leveraged inverse funds are designed to go to zero long term. I'm looking at it as a trade. And to be fair, I cheated a little bit because I didn't feel like finding something I was ready to go long on yet. When I think this market bottoms out, I'm absolutely with Mike Carr. I'm going to be loading up on IWM stocks. I owned a ton of small caps, even well into the start of the bear market. I finally started selling them all once I realized what sort of environment we're in. So I do think after some selling, I'm going to be looking at really both of the recommendations that they made.
Now, to Chad's point on bond funds, huge risks there, as he pointed out. An interesting one is SGOV, that's short-term government securities that tracks the Fed funds rate. So you're not going to get killed. If you go into a bond fund, like Chad knows, if interest rates go up, you can lose 20% of your money. In SGOV, you're probably not going to lose 20% of your money, no matter what happens. In fact, the volatility on that is next to zero. And its yield is about 0.8%. So if you just want to hide, I think that's a great place to hide. It's technically a bond fund, but it's ultra short term. And as the Fed pushes rates up to maybe 4%, lots of potential there.
4%, that's quite a forecast. I was thinking they'd back off a little sooner than that, but I guess time will tell. Chris, I find it extremely on brand that you couldn't help but think of this as a short-term trade, even though it was just delivered as a long-term investment. That is your time preference after all. I think that was a great couple of extra insights for folks to chew on. I want to thank you all so much for joining for Options Arena yet again this week. You, the viewer, thank you so much for watching. If you like this video, shoot it a like, hit the subscribe button, share it with someone, leave us a comment, and definitely be sure to vote for your favorite Option Master take. In the description below, you'll find a link to a survey where you can fill that out for us.
Well, however they vote today, Mike, I think we can all agree that I definitely am the superior smack talker. However, once we get Amber back in here next week, I may have some competition in that field.
No doubt. All right. Thanks again, guys, and thank you for watching. We'll see you again next week.